Hi, everybody. Welcome back to Ox Talks. It is Tuesday, December 19th, 2023. Appreciate all of you being here to watch these videos. Thank you for subscribing to this channel, helping it to grow. Thank you for liking the videos, hitting the bell notification, and most importantly, sharing these videos with as many family, friends, coworkers, and colleagues as you possibly can in these interesting times that we are going through right now and likely to continue experiencing into next year. A couple of the articles I'm going to share with you today are indicative of what's happening. And we'll talk about homelessness, which I think is a very sad symptom of a crumbling and failing system and economy. And then we'll talk about the real estate, commercial real estate defaults that are unfolding now and will start to really gain steam into next year. First, I want to say I'm uploading this video a little bit early today. The day's short for me. I have a workout, and then in about an hour or so, then I've got to go to a Christmas party for a client of mine. So I wanted to get something recorded and up for all of you guys for this evening early. I spent some time today just briefly touching on the law practice, serving written discovery to some defendants in a real estate case. At least in California, in civil cases, the way you obtain information from their side, documents, information about their facts and their witnesses, is you serve what's called written discovery. And that's in the form of interrogatories, questions, requests for admission, asking them to admit certain things, and then demand for a production of documents, asking them to produce documents. We also have obviously depositions where I sit with the witness and examine them under oath. You can conduct written discovery in California against parties to a case. They have to be a named party, either a plaintiff or a defendant. You cannot send written discovery to a third-party witness. You're limited to deposing a third-party witness or sending them simply a subpoena for production of documents. So anyway, spent several hours on this file preparing interrogatories, demand for documents, requests for admissions, assembling all the exhibits, directing their attention to certain documents that you want them to focus on, and got that served. So then in California, they have 30 days to respond to those questions. If they don't respond under oath, they don't verify them, and they don't give proper responses, there are remedies that I have. I can go into court and ask the court to order them or compel them to provide further responses or documents. So a little bit of a tidbit on how civil law practice operates to get documents and facts from parties in a case. Let's talk about the articles I saw today that I thought were important in terms of just what's happening with the markets. Stock market continues to go higher, which is no surprise to any of you, given what appears to be the job owning from the Fed about a pivot. Metals, gold and silver, last I checked, we're also putting on pretty nice gains today. I wouldn't be surprised if that continues also. Let's talk about the reality on Main Street. And I saw an article earlier from Vice that came out yesterday, and it says homelessness in the United States at highest level since 2008 financial crisis, a federal report reveals. And it says HUD's annual homelessness count, which is called the point in time or PIT count, is not a count of all cases of homelessness throughout the year, but a snapshot of who was homeless on a single day at the last 10 days of January. And listen to these statistics. It says this year HUD said 653,100 people were experiencing homelessness, and that's the highest number since HUD began issuing the report in 2007, and a 12% increase from 2022. Nearly one-third, or 143,105 people, of those experiencing homelessness reported that they were chronically homeless, also the highest number ever counted. In a press release, it says HUD said that the increase in homelessness was a result of the expiration excuse me, guys, of pandemic era expansions in the social safety net, like eviction moratoria and rental assistance. The rise in homelessness at the beginning of this year continued a pre-pandemic trend from 2016 to 2020, when homelessness also increased. Of those experiencing homelessness, 60% were sheltered and 40% were unsheltered, sleeping outdoors or in places not meant for human habitation, according to the report. Homelessness among families rose 16% for individuals, for 16% for families, and for individuals it was up 11%. 16% rise in entire families that have no place to live. There were 39,700 people, it says, over the age of 64 experiencing homelessness, and 34,700 people under the age of 25 experiencing individual homelessness, meaning they were not with their families. Really, really sad statistics. In New York, the homeless population increased by 30% year over year. The highest percentage increases were in New Hampshire. It says 52%, and New Mexico 50% increases. California's homeless rate, it says, on the other hand, only grew 5.8% year on year, though its overall unhoused population remains the highest. Boy, I'll share a story with you. My office is located in a fairly nice area. It's about a block off of a super high-end shopping and tourist area, and there's an alleyway, which people park in. There's restaurants back there, and I don't know. A little while ago, I went out one evening to take a bag of garbage to the dumpster, and I went over to the dumpster. It was dark. I couldn't see anything. As I was throwing the bag into the dumpster, I peeked over the edge, and there was a man in the bottom of the dumpster, looked back up at me with his white eyeballs I could see. He had a little flashlight, and he was rummaging inside of this dumpster at the bottom of the dumpster for food or scraps or what have you. There was a little sleeping bag and such, I guess he had placed on the side of it. Obviously, it startled me because I wasn't expecting to throw away my garbage and have a pair of eyeballs looking up from the bottom of the dumpster. But it's just very sad. I'm seeing a lot more of it in this area. Homeless shelter, or homeless tents, homeless communities popping up more often around areas. Again, comment down below. What are you seeing in your areas? Obviously, homelessness probably is not as rampant in areas where the weather is extreme in terms of cold weather. Maybe you don't see as much of that. Comment down below. Let me know if I'm on target there or off target. I know in the summer here it gets extremely hot, and these people are still outside. They're still pushing shopping carts around, and they're still sleeping and living outside. I truly don't know how they survive. The article continues. It says, in an analysis of the newly released numbers, the Urban Institute blamed the increase on a lack of affordable housing, which has led more people to become newly homeless. These numbers are a jarring snapshot of the increasing housing affordability challenge Americans face and the lack of long-term federal investment to meet the urgent need for affordable housing. It says, unfortunately, the PIT confirms what we've been saying for years, that the rent is too high for a growing number of Americans and that far too many people are just one missed paycheck or health crisis away from becoming homeless. The National Homeless Law Center said in a statement to the motherboard. So again, we talk about this, talk about trying to insulate yourself if you can, by having some alternative sources of income, by having a side hustle, by, if you can, owning your own business and taking it, taking it slow, not getting into debt. I know that we're getting a little bit far afield from the homeless article, but look, anybody who has an employer, if you do not have reserves put aside, you are one paycheck away from potentially being homeless, being evicted from where you're at. I know that sounds alarmist, but I think that might be the reality for a lot of people out there around this country. It says HUD's report is viewed as a likely undercount Okay, so what they're saying is this report actually probably undercounts the true level of homeless out there. It says many unsheltered people are huddled in subways, hospital waiting rooms, or doubled up on couches in the freezing period of time that this count, they said, takes place. So they're not even probably counting those, and those are the ones that we see every day, I see every day as I'm driving around town. So the number is much more than 650,000 people in reality. Again, it's a symptom of a lot of things going in the wrong direction in this country. How do we get it back, on the rails? I don't know, but I wanted you to hear those statistics and process that, because the article says it continues to worsen. Next one, nearly half of office loans now risk default. Shifting over to the real estate collapse. This is bad news, regardless of what the Barbara Corcorans are out saying and all the other cheerleaders that now's the time to invest in real estate. We're talking about commercial real estate here, but let me read you this article. It was out of a Commercial Observer from yesterday. It says the outlook is ugly and the numbers are even uglier. A new paper from 4 economists at the National Bureau of Economic Research argues that 14% of the $2.7 trillion commercial real estate loan market and 44% of office loans currently carry outstanding loan balances higher than the property values are and are at risk of immediate default. The paper also calculated that a 10% default rate on all CRE, commercial real estate loans, could trigger up to $80 billion in bank losses and dozens of potential bank failures. The fact that the interest rates are moderating a bit, I'll get to this later in the article, is not what it's all about. It has to do also with the value of these properties, and is a reduction of the interest rate over time, if it does even happen, if it's rolled out, is that going to have a commensurate impact on increasing the value of these properties that have already suffered so much that they're underwater? It says the article analyzed 35,253 outstanding loans totaling $825 billion in aggregate from December of 2023 CMBS market using data from the DRBS Morningstar. And it says the economists found that while the average CRE loan was underwritten at 61% loan to value LTV ratio, 29% of outstanding CRE loans and 56% of office loans currently hold loan to value ratios higher than 80%. That means the property value behind the loan has declined from the underwritten value by at least 19%, thus creating likely refinancing challenges in the event of further property value declines. Meaning when these loans come due, the borrowers will not be they won't be able to, but they also won't be as motivated to refinance or put money in to refinance a loan when a property is decreasing in value. Even more concerning, the economists found that 14.3% of all loans and 44.6% of office loans presently exceed the current property value underlying the loan, meaning the LTV exceeds 100% and the loans are at risk of imminent default. So who does this fall back on? Well, it probably falls back to the banks that issued the loans. And what's that going to do? Are we going to see a cascading of more bank failures in 2024? We very well might. It says the study found that lenders originated the average CRE loan at 3.97% rate. So most of these loans were at 3.97. Now it says average refinancing rate would be 6.71%, and for office loans at 7.2%. So it closes out by saying if these same loans were asked to refinance today at the current interest rate of 6.71%, a whopping 17.2% of all CRE loans and 24% of all office loans would not be able to pay their obligations. So they'd have to actually bring more money to the table in order to refinance that loan. What's the odds of that happening? Probably zero. Very low odds. So what are these borrowers going to do? They're going to basically give the property back to the banks, and the banks are going to be stuck holding this inventory and non-performing asset and non-performing loan. It's Commercial banks are the most at risk when it comes to impending maturity defaults. Commercial real estate loans account for $2.7 billion in U.S. bank assets in the aggregate, according to the report. A 10% industry-wide default of CRE loans would cause, listen to this, roughly $80 billion in commercial bank losses. A 20% industry-wide default of CRE loans would lead to $160 billion in bank losses. So the article goes on and provides, additional and supplemental data, but the point is that it's ugly with regard to these commercial loans. So we're going to keep a watch on this. There's been a reprieve in the bank failure rate for now. Have they just kicked the can and staved off the onslaught for a few more months? We will see. I'm going to go grab my workout here a little bit. Like I said, all of you, please get your exercise in today. Health and physical fitness is so important. Please get some steps in, walk a bit, get some strength training in, some push-ups, some sit-ups. I hope you found the content useful today. And with that being said, I will see all of you tomorrow. Thanks. Have a great night. Bye.